A common problem for many traders is staring at the charts all day long and taking trades out of boredom. This is something that I personally experienced in my trading journey, and that's why I decided to share with you how I managed to overcome this issue and how I make sure that I'm prepared for the upcoming trading week. In the first year of trading, we're super excited, eager to trade. We feel like we're not progressing if we don't have an open position. We sit in front of the charts with hours thinking that we might miss on a good opportunity that might never happen again. We tend to build bad habits, and it's quite challenging to get rid of them if we don't know the trigger for those bad actions that we tend to repeat over and over again. Listen to this carefully because it will help you to get rid of other bad habits, not only trading out of boredom. All habits, both bad and good, are composed of 4 different stages. First one is trigger, and this is an information that we receive that predicts a reward and initiates behavior. Second is desire or emotional state, and this is what gives us the motivation to act. Without a desire for the change of the emotional state, we don't act. And don't worry if you don't understand what I'm talking about, I'll give a simple example later. Third one is action. It's the actual habit that you perform. And the last one is reward, which is the end goal of every habit. And why do we want rewards? Because they satisfy a need that we have. Now, let me give you a simple example. Imagine you're passing by an Italian restaurant and you're feeling the smell of a freshly made pizza. This is the trigger that predicts a reward. The desire or craving happens when you start thinking of how good it might taste. You get in, you order one, you eat it, this is the action, and the reward is the feeling of satisfaction from the taste that satisfies your need hunger. Let me now relate it to trading. Trigger is the boredom, and you want to do something to kill the boredom, which is the reward or need in this case. So what happens in between? The time is passing, you're getting even more bored, and you get the desire to kill this boredom. This desire is strong, and you end up taking an impulsive trade that is not part of your trading plan, which is the action. So being able to recognize those triggers on time or eliminate them is crucial for getting rid of those bad habits. So let's say you don't want to eat pizzas, you want to eat healthy. Then you can just take another road and you won't feel the smell that is going to cause this trigger that brings this desire that leads to an action. So I guess you understand where I'm going. In order to avoid taking impulsive trades out of boredom, you will have to fill your calendar with something that is going to entertain you and keep you busy. What I personally do that helped me with the issue that I previously mentioned and at the same time keeping me productive is I do a detailed analysis on Monday mornings, I mark my points of interest and I set alerts, as well as I do a detailed weekly plan. Actually, I do the plans on Sundays. So my calendar is full of different activities that I have to do, and I'm not opening the charts unless the alerts get triggered. I wasn't planning to share my analysis that I'm doing on a weekly basis, but just for you to see an example of how I usually do it, I can put the analysis from the last couple of weeks, and let me know in the comments if you want me to share my weekly analysis with you. If there is enough interest, instead of Mondays, I can do it during the weekend and share it with you. Weekly highs are protected and the weekly lows are liquidated, which means that the weekly overall is bearish, but it doesn't mean that this week must be bearish. Then I go on a daily. What I can see on the daily is that we had a market structure break here with the full body, which shifts my mind, and I would definitely be interested on looking for buys at least until the weekly high. And we had actually a weekly fair value gap on at this area. Yeah, we can see that we have a weekly fair value gap here. So I would be interested in looking for buys until we take this weekly high and we tap into this weekly fair value gap, which price might respect and then continue on the downside. And this is the most likely scenario in my opinion, but of course there are many other scenarios that might play out. Then I go on the daily. There are 3 areas that I'm interested in. It's very unlikely that price will go in such a discount and then continue in the upside, but it's possible. What might happen is that the first half of the week is going to be bullish and the second half of the week is going to be bearish. Or this week might be bullish and we might see next week bearish. This week we don't have any significant news, so we might see a slow week. New month here. Overall, we're bearish. I would just mark the last expansion that we had, which was this one on the downside. So currently we're in this range. We drop on the weekly. Two things might happen. Price might either respect this zone and continue down, or create a new high, come to this volume imbalance, and maybe after that drop lower. When we drop on the daily, as I said last week, price started creating higher highs and higher lows. On the daily, we can see that price came and respected this order block, and now it's pushing higher. But we should keep in mind that we're in premium from this expansion here that we had. I mean retracement actually after the new lower low was created. So we had a retracement into premium. Price left this volume imbalance here, but it's not a guarantee that price is gonna come for this volume balance now. So currently we're still bullish unless we see, when we see this low broken, then we'll know for sure that price is gonna head for a new lower low on a higher time frame. But for now, there are a couple of possible scenarios. When we go to the daily, we can see that price filled this fair value, weekly fair value gap. We can just remove it. Came into this order block, tapped it. We had a nice drop on Friday. Price broke structure here, but it can be also just a liquidity grab. So price might just respect this zone or here and go lower to this order block and then continue higher, or drop lower to break this significant low and continue on the downside. So we can see that price is creating a trend line liquidity as well. What is most likely to see, according to me, is price respecting either this or this zone and dropping lower at least to here. I didn't have time to do analysis yesterday because I was too busy, but let's do it now. Okay, the picture now is very clear. It's so clear that it's heading downwards. Let's drop on a lower time frame and see what's happening. This trendline liquidity grab happened I think it was during NFP. Yeah, it must be. I didn't trade on Friday. So price might actually just come somewhere here and continue lower. So if we see a nice retracement with some liquidity here, we can look for sells from this zone or this zone here. But right now, it's just about to wait and see what we're gonna get. First, let's start with the XY. We created a new lower low, so price is obviously heading to this weekly order block that we have right over here. What we're gonna most likely see is price dropping a little bit lower, tapping into this weekly order block, and then expecting a retracement on the upside. Point of interest as a breaker block would be this one here, lining up with 102. Another one would be that one there that caused the push on the downside. Nothing much to say here. Currently, as we can see, price just tested this 100.00 institutional and was probably heading lower to take this weekly low from previous week. Took Friday's high and price started dropping lower. As I can see, this order block here is lining up perfectly with that. I would just wait for now. If we come lower to 99, tap into this weekly order block, and we have a clear shift in market structure on the 1 hour, then I'll start looking for buys. But currently, looking at price as it is, I wouldn't do anything. Okay, that's it, guys. I really apologize for the unstructured analysis. I didn't plan to share it, but I hope you found the video helpful and got some value from it. If you did, you know what to do. Hit the like button, subscribe if you haven't already, and hit the bell for notifications. I really appreciate all of your support. Trade safe, and I'll see you soon again.